The festive season is upon us, and it seems that most foreign investors have also left to go on holiday. We haven't really seen any movement from a foreign perspective, but it seems that most investors are in fact dumping some of those banking stocks to get involved in rights issues.
Yeah, thank you for having me in the show. Yeah, just to echo your sentiments, we've been seeing most of the retail investors in the market actually selling off counters that have been profitable in the past and actually investing that money into the Kenya Power Network Company rights issue. So this is expected to continue until part of next week when the offer closes. Yeah.
We did see some positive sentiment coming through today. We're sitting at around 4,300 or so points on this NSE 20. We were hopeful that we'd hit that 5,000 level by the end of the year. That isn't the scenario that is playing out. You know, looking into next year, do you think we could see strong upward momentum as we kick off 2011?
Certainly yes, because looking at where we are in the year, and the market has maintained the level of the NSE 20 share index at those particular levels, it's actually an encouraging sign, because in as much as we are going for the festive periods, we are seeing the market maintain its resilience around the said levels. So going forward, I believe that the banking stocks and mostly a recovery of the manufacturing sector will push the index to the 5,000 level.
Let's touch on the banking stocks. I mentioned Cooperative Bank and Equity Bank being one of two stocks that have been under pressure. But that said, Equity Bank and Cooperative Bank, two stocks that have enjoyed extensive gains. Prospects for 2011?
Yes, sure. Well, prospects for 2011, I mean, looking at Cooperative Bank, they have been able to cement, their top-line revenues by their branch expansion program. And some of these benefits are expected to come into the coming year. Well, for equity, the stock has been quite volatile, and what will derive gains for equity going forward? We are likely to see that the agency banking and their participation on online banking and the ICT platforms actually come to reduce the cost-to-income ratio, which again will add to the efficiency of the bank, which again will translate into profitability. So I think come Q1 of 2011, most of these counters will trade even above their highs that we've seen for this year.
So you'd still be accumulating banks, even though we have seen elevated levels on the share prices?
Pardon?
Would you still be buying banks at these levels?
Yeah, sure. Because going by the predictions of the World Bank, that the economy will certainly grow at a level of 5 to 6% in 2011, and the bulk of this growth is going to be derived by the banking sector. So my bet is I'm going to invest. I mean, any investor would invest in the banking sector at least to benefit from this particular growth in the economy.
Central Bank advertising the likes of 5-year and 2-year bonds and 15-year bonds. That should be launched relatively soon. What about the liquidity for the bonds and the uptake, given the fact that we've just discussed that volumes have started tapering off and there's less people involved in the market?
In as much as liquidity is not an issue in this market at this point in time, what I think is becoming more of a risk is the yield, because most banks are looking at what loan books are offering in terms of growth and are looking at the returns from the bonds, and most banks are shifting their loan portfolios into their loan portfolios. So for the actual primaries for the 2-year, which is favorable for most banks, I believe we're likely to see a oversubscription. And going forward again, I think that for the 15-year, we're likely to see a bit of hesitations in that particular level. Again, the coupon is at 9%. So most bankers will be looking at 9% for 15-year and probably say around 4.5% for the 2-year. Then they'll do their maths and see I'm better off in the 2-year, on the short end of the curve.
Looking at Kenya Power and Lighting rights issue, we saw Renaissance Capital putting a price target on the stock, upgrading it in fact to buy a price target of 41 shillings per share, purely because it's also a monopoly utility. Would you agree with that?
Yes. Yeah, certainly, I do agree. With that particular valuation, because looking at KPLC as a stock and as a company, it's a monopoly in the power distribution sector. And looking at what we do expect in terms of power growth going forward, I mean, we are likely to see revenues, top-line revenues again go up. And once this trickles through, it is going to translate down into the return the investor gets. So I think most investors right now are sort of taking positions right now in the market for that gain going forward. So for me, as an investor, yes, I'll take a position in KPLC.